Daniel, welcome back to the Kaiser Report.
Good to see you again.
Yeah, we actually, last time I saw you, we were talking to Russell Brand about doing an activist hedge fund.
Yes.
And then he chickened out. Walk, 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 walk. And then he disappeared off the face of the earth. But financial innovation must continue because this is where the real revolution is with blockchain, with Bitcoin, with Ethereum. So let's get into it now.
Sure.
You're working with the very first hedge fund on the blockchain, HitFin. It's actually on the Ethereum blockchain. Tell us about it.
So as we went into last time, Robinhood Minor Asset Management Cooperative wants to try and democratize finance by bringing some of the powers of the financial industries to a wider number of people. So we've partnered with HitFin to transfer our share registry system onto the Ethereum blockchain, which adds more powers to the co-op. Shall I explain a bit more?
Well, you know, first of all, on your hedge fund, it gives people the chance to participate alongside the hedge fund industry at large so that you're democratizing everything that's going on in the hedge fund. So instead of trying to, let's say, wholesale reform everything and rebuild it from scratch, why not just expand it to allow a greater population to enjoy the fruits and benefits of financial innovation?
Yeah, you're certainly onto something there. I think for us, it's not... There's a lot of question of and talk of scarcity, austerity, etc. But our analysis is actually that there's a great deal of value already in society. What is scarce is who gets to determine the flow of value through society. And we're of the opinion that more of the value flowing through Wall Street should be irrigating the commons. Yeah, so when we talk about democratizing finance, I think it's trying to find ways to use financial technologies to sing in concert with innovations happening in grassroots
Right. Well, that's what we were talking to Russell Brand about. Was the Karma Bank hedge fund or the Start or Smart Boycott hedge fund, where you were using the power of boycotts to create short sales that became profitable, and then use those profits to be channeled or irrigated in a way. So you're using the tools of capitalism to irrigate or to democratize or to channel funds more equitably through society, and we're totally on board with that. So now Ethereum is now reaching almost $1 billion in size. We were the first to talk about it on this show a couple of years ago, and it's they're essentially providing the why Ethereum?
Well, in part, it was to work with HitFin, who've built their technology stack on top of Ethereum. And part of it is the valuation. So the stability of knowing that that amount of capital is there gives the security that that blockchain is not going to quickly disappear. In terms of the technology that they've built, the additional functionality and opportunities that open up to us are things like an aftermarket for member shares. What we've essentially engineered with HitFin is the first crypto equity or crypto asset widely available. So when we talk about the first hedge fund on a blockchain, that's really what we're talking about. What that's going to allow us to do is previously within the co-op, when we wanted to distribute excess funds, it was quite a manual process. But what using a blockchain token allows us to do is each individual member can kind of divert the profits where they want, which is powerful.
Right. The cost of this is close to zero. I mean, there's a development cost, but once it's developed, the cost of the settlement of all these contracts is near zero. And having worked on Wall Street myself for many years, there used to be a 3-day settlement date. You used to have a whole back office, hundreds of people. They send out dividend checks, et cetera, et cetera. Now with smart contracts using blockchain technology, building on top of the Ethereum blockchain, this can all be programmed in, done instantaneously without a middleman, without having to verify the transactions. It's all pre-verified, if you will, or the transaction is the settlement, in other words. And I know on Bitcoin Capital we use this for daily dividends in Bitcoin. And that would have been impossible a few years ago. The cost of sending out a daily dividend would have been impossible. Now it's quite possible. And as a matter of fact, I think Bitcoin Capital is now making some investments in Ethereum as well, because it is a very attractive currency. And so smart contracts, as we were just, so build on that a little bit. So there's derivatives, which are bets made on top of bets on top of bets. And there's this whole pyramid on Wall Street in the city of London where at the base of that pyramid is basically nothing. It's like the Bank of England or the Federal Reserve Bank, they're leveraged 100 to 1. There's nothing there. It's a huge scam. But here you're actually building on something that has more integrity, correct?
Yes. So let's think of so with Bitcoin, one of the parts that gives it value is the scarcity of the mathematics behind and the cryptography behind the token, as it were. So its value is based in its scarcity and it's not tamper-proof. You've covered Bitcoin really well, so I don't need to go into that. What we've done with the Robinhood token is it's backed by the dynamic portfolio of our algorithms running on Wall Street. So it's backed by equity in broadly successful companies, as per the description of the algorithms from last time. But I just want to touch on a lot of the discourse around blockchain. You mentioned the opportunity to reduce friction in the back offices. I think for us, there's the opportunity is even deeper than that. It's not just about making the finance industry more efficient. The opportunity really is, or an additional opportunity, is in creating whole new tools and whole new ways of supporting people doing things differently.
Okay, so let me jump in here. For example, email, it's a technology, it's pervasive. The inventor of email just died this week, so I guess it's on people's mind. But it totally changed the way people communicate and cooperate and build scalable projects. Now apply that to money. So instead of having a central money payer and going through channels of a hierarchy and someone else determining what value is, like the value is your work as defined by the concept of your worth per hour, those values can erupt spontaneously, they can be distributed spontaneously, and the value itself, this notion of value for the first time really in thousands of years, because of the frictionless quality of the blockchain, is going to change profoundly. An artist, for example, can come along, create something in this environment, suddenly it's perceived as having value, and you have quite a shift in the culture and the economy simultaneously. Is that a fair statement?
Yeah, I'd agree. I think more people participating in and determining how economy works for them. So an excellent example of this is a European-funded citizen-led blockchain and other based project called Descent. And I don't know if you've looked into them at all, but
sounds good.
Yeah, they're worth. I mean, you've spoken to Jaramil before. He's one of the people involved in that. But essentially, what it is people are creating value on the ground all the time. What is dangerously out of date is the financial system. It's not able to support the new way things work. The old notion of work is dead. It's obsolete. But the financial system hasn't evolved to reflect and sing with what's happening on the ground. And in fact, the old system, we've seen what it results in. A larger amount of money being trapped in kind of corporate coffers or, as you mentioned, a Ponzi scheme or whatever.
Now, the whole banking industry is supposedly going to shrink by 45% this year. Hundreds of thousands of bankers laid off. The entire industry is being transformed. Those people are now facing the reality that this blockchain crypto world that's emerging in front of their faces is having a fundamental paradigm shift. The banks, to me, are fighting a rear guard action when you have someone like a Blythe Masters come along and create privileged or permissioned centralized blockchain. That is actually going in the wrong direction. Your thoughts?
I don't want to get into
or is Blythe a client? Maybe I stepped on some toes there.
No, I'm not going to get into a mudslinging.
Come on,
thing
this is what this show is created for us.
I will say that I think that there's different opinions on what we need to do to kind of deal with today, the different issues of our time. Some people want to create permission blockchains to do whatever it is that they want to do, fine.
Okay, but this kind of equivocation is leading to, for example, in Bitcoin, a complete ceasing of operations. It's at the risk of collapsing because there's no leadership on the development side on this issue of block size.
I think this, again, it's a question of governance. The emergence of Bitcoin didn't determine the political paradigm of how do you govern this in a way that the participants involved in its production and using it, the key people involved, to create a way of making intelligent decisions around that
Right.
stuff.
Well, I mean, Ethereum is really crypto 2.0, if you will. It's another take on crypto. I mean, Bitcoin might not be the chosen one. It might not be the survivor in all this. Ethereum looks awesome. Dash, which is they've been on our show, it's a fantastic coin. They decided they needed to increase block size to double the block size. They did so. They took a consensus. It was done in a day. So these Startcoin, which is for the global startup market, own a piece of the global startup market with Startcoin, be a part of the global startup market with Startcoin. It's going like gangbusters. It's in Volgograd. It's in Botswana. It's in London. Can people use Startcoin to buy into your fund? Can we do that?
So at the moment, we'll be accepting. So I should say this: the transition to the Ethereum blockchain should be ready in April or May, and at the moment, people will be able to pay in fiat currencies, so dollars, euros, I think pounds, and they'll also be able to pay with Bitcoin. Now with
Take Startcoin.
With Shapeshift, you should be able to.
Well, Shapeshift, you will be able to.
Yeah. So by extent, we haven't baked it into the system, but by virtue of the fact we accept Bitcoin by extension. So welcome.
Right.
You can use your stock.
So Startcoin, you can buy into this democratized hedge fund.
We call it the cooperative 2.0 for the 21st century.
Well, you know, we first started talking to you about this, I think it was 3 years ago. And you were ahead of your time, essentially. You know, but at that time, because we were doing Karma Bank, and I said, this is, you know, similar to this. And during that time, crypto has erupted like Mount Vesuvius. It's become now a huge paradigm-shifting colossus that's reshaping the global economy. So kudos to you for seeing the vision and sticking to the vision. And now this 2016 looks like your year.
Well, we survived last year. A lot of hedge funds they sunk. So we're still here. And yeah, we're excited for some of the innovations. I think we're experimental enough that we can try new things. Some funds which are 500 million to $1 billion, they're too big to really innovate, I think.
All right, fair enough. Yeah. We're out of time. So Daniel Sand, thanks so much for being on the Kaiser Report.
Thanks, Max. Thanks, Stacy.
All right. Well, that's going to do it for this edition of the Kaiser Report with me, Max Kaiser, and Stacy Herbert. I'd like to thank our guest, Daniel Sand of the Robinhood Minor Asset Management, which is partnering with HitFin. If you'd like to get in touch, tweet us at Kaiser Report. Until next time, bye, y'all.